I'm going to start with the Dow Jones today because it's in a weaker situation, and the rally that we've experienced overnight in most markets appears to be corrective, and that's showing up most clearly on the DJ here. So we're looking for wave 1 here with an A and a B and a C wave over here. So we've probably got 2 more lows to come into place for this particular market. Doesn't mean they all need to do that. Let's just move into the intraday. I'm not sure if I got this on 1000 or 100. 1000 did the trick, so let's just get in a bit more data here. So from the top here as the B wave, we're looking down as 1 and 2 and 1 and 2 and 1 and 2 and 1 and 2, and moving down into this area through here. So the point that this market has moved down quite deeply from here kind of puts a bit of a bearish bias on this. So that means that a move under here would be the short trade at that point. Okay, so that would take you down for a nice bit of a bounce off here, but would expect that to come down further, definitely taking the lows out here for this. So in this case, we can look at the markets having wave 4 and 5 for third and fourth and fifth to finish off down here for this. A lot of the stocks that we looked at just need another low, but we need to be mindful of 2 lows with all of the markets. Okay, so in that case, let's go back. So you can see here that I mean, it's not over yet. It's possible to have a low in here, but all I'm saying is this has moved down quite deeply through here and overlapped this one here, which is not a big deal, but overlapping this one would be. So that means that this shorting this one here would be that the market's come down through here, retested, and then if it takes that low out here, then it's going to create overlapping wave structures at this point, because we don't have 5 waves from this low to this point here. You know, we can work 5 waves from this low as 1 and 2 here, then 1, 2, 3, 4, 5 for third wave, fourth wave, and fifth wave. We can work that in, but overlapping this one here would create that as a corrective pattern at this particular point in time. So we'll just see how that plays out. But that would be your short trade, and if that's going to produce here, then and the Dow Jones is going to come down further here, well, it's obviously not going to come down by itself, is it? So, you know, the other markets need to come down on this as well. So we'll just put that to the side for one moment. So we've got the S&P here. So with the S&P here, yeah, same thing. We're just really, well, in this case, we're just looking for one more low here. It's, as I mentioned in the stock video this morning, it's a little bit difficult to, you know, we can expand it out and call this wave 1 here and wave 2 over here. We could do that, but it just doesn't sort of match up nicely with stocks like Apple. So this is Apple here. So we've got this A wave here, this B wave here. So it's a bit difficult to call this a wave 1 here and a wave 2 for Apple, so to speak, you know, because it's quite a big wave 2 here. Do you know? Well, it's humongous, you know. So I still, you know, it's the stocks that creates the pattern at the end of the day. So we're just trying to figure out the low here. But I mean, for Apple here, no matter what happens, once and if we get support on the 150, then we can go long from that point, and we'd be looking at going long with the classic trading levels pattern sitting, you know, on that 150, if that's the 150 here. We need this particular process, this model, this pattern to, you know, apply itself here, because that tells us that the market has tested the 150 and now has it as, you know, as support, and that improves our timing for all of this. But in the meantime, it's possible from looking at the Dow Jones that we can come down at least one more time here. Now this is a little bit complicated here, and you could count it in a different way. I totally understand that, but we'll just see how it goes. It's just difficult to call this a wave 2 here, so that when we look at this market here, to call this a wave 2, I'll probably go with Apple, but it's doable. If we do call it wave 1 and 2 here, then we'll need to get we'll end up getting 2 lows in here. But the good thing about this too is that you know, if we were going to go long in this market, then we'd want the closest largest number, the 4,000, as the support at that point. And it's not support at this point. You know, the market's still trending down with higher lows, lower highs, and it's not sitting on here as support. And once again, for our setup, we would definitely need this particular pattern here to tell us that it's been tested as support and it's not there yet as this. And even if we did make a new high here, if this was the case, making a new high here, we'd still need to wait for the ABC pattern to come into play over here before we could go long at that point. So it could still just retest this and move down from that point. So we need these two highs in here for that to play out, and they're certainly not there yet. But yeah, it's possible. So if we do have two more lows down here, then we need to look at the other count here, and the reason for looking at this having a deeper move down here and looking at this here as an A wave, a B wave, and a C wave down here, and then moving up here, that would be in line with the US dollar, because this particular turn here on the 2nd of February, or the first, whatever, 2nd of February I think it is, that brings us over to the US dollar. So that high on the 2nd of February is also the low here on the US dollar. And with the US dollar here, we're looking for 5 waves up here. Well, not 5 waves up, we're looking for an A and a B and a C wave up through to here. Now, yesterday we mentioned that we would have problems at the 500 here, or the 105 in terms of the DXY. And yeah, it's doing that. We can just check on this pattern as it stands. So we want to be, oops, not the wrong button clicking. So in this case, this low at the 2nd of February is that high on the S&P. So we've been looking at this as the A, the B, and then the C wave up here. And we're looking for 1, 2, 3, 4, 5. So we're just moseying along, you know, just keeping an eye on this, and everything seems to be going according to plan. We know 5 is the second strongest number here at 500 as a C of D here, but 105 for the DXY. So that number 5 is the market's just reacting from that. We can just expect this to push up and eventually do its thing here, you know, spending some time here. So, but it does give us that sort of, you know, if this, you know, if this seems to be in line with many markets actually, but for the S&P, if we're looking at this as 1 and 2 here, and 3 here, and 4 here, and 5 here, and then topping out here, well then the reverse of this logically would be this one here coming down, right? So that can come down and test these lows here, and then while the US dollar corrects at this particular point in time and comes down as an ABC pattern to its 50-60%, then this will also find support and push up at that point. So we've either got one more little low in here or 2 more lows. And if we're going to go for 2 more lows, well then we'll have to go for this here, I reckon, and then push up from that point. Either way, what we need to do is we need to be short now, right? Or if we get the 4,000 as the support, then we'll go long from that point. So it's as simple as that. If this is going to be a bigger bearish picture, let's imagine for a moment that we know that this market's working in line with the S&P because they're turning on the same date. So what happens if we think that this here is some type of A, B, and C pattern in here, and we're going to move up higher past this up here? Well, then that's going to put the S&P 500 in a bigger bearish picture, and that biggest bearish picture would be this picture, this image here of looking at this as an A and a B and a C wave, and that coming down for wave 1 here, and ABC back for wave 2, and then wave 3 coming down here, to the previous lows, and wave 4 and then wave 5. It would be something of that nature, and we would look to short it at this point. But the reason I'm not going with this, I mean, it's good to understand it, what would be bearish count. I mean, it's important to understand it, and what we would, how we would spit it out, Pete? How would we handle that? And this is what we do. We would short this wave 2, this the B wave here, and we'll probably be able to move in a little bit earlier than that. But the reason that I'm not looking at this here as a corrective pattern is because it's quite clear on the euro dollar, the DAX, the Aussie dollar, all of those sorts of markets outside of the US, that those markets have a very, while this has got 5 waves down here, those markets like the Aussie dollar have got a nice clean 5 waves up, and while this is rallying at the moment, the Aussie dollar and the euro dollar are having its ABC correction. Once they're finished, and once this is finished, that will push up, and the Aussie dollar pretty much works in line with the S&P as well. So that's why I believe that we'll get up. We're in some kind of corrective move. Corrective patterns are tricky little suckers, so we need to not get too fixed, on what we've got here. We just need to keep working the trend and seeing how it goes. But we're still a long way from our B wave up here. Do you know what I mean? So we're over halfway, but we're not there yet. Sometimes the market just comes back to the wave 4 of 1 lesser degree, so we may end up being shorter here, but let's just see how that plays out. But these are the moves here, and as far as the crow flies, we currently need to be short now under this level here. We're probably short already, and that's all good too, but that's the short trade at that point with the stop above, and I'll just plonk that in there and leave that there, and we'll just mosey on to the NASDAQ. So for the NASDAQ, we're going to be looking at this dropping here as well, so the short trade would be under here for that. So we still need another move down for the NASDAQ from one. Here's the A, the B and the C wave to come down, and this will be the same for this has already been triggered, but for the Russell as well. Still plenty of food on the table here for this, so we should be taking out this low here for the Russell at this point. Yeah, I've only got 3 waves down here so far. Not the best looking 5 waves down here, but once again, the move to the upside here counts quite nicely as an A and a B and a C. I mean, if it was going to turn on us at this point, see, it's at even from this point to that top there at the 50%, and I can't really get 5 waves. I can't get 5 waves out of this whole move here just as yet. So anyway, if you missed that, you can just go under here for that. So I'll just leave that there. But that's the same for the DJ as well. So I'll just bring the DJ back over here. And yeah, like I said, going under this low here would create the short trade at this point, but I'll definitely start to take money off at some, at this low here, in this low area here, take some money off, and then the rest of it at 32.50, because there will be a bounce and we can go down further, but that bounce will just give you grief at that point. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.